You're listening to UCW Radio.
In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine when it hurts.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
All right, welcome to Money Never Sleeps Radio. This is the show where we talk about anything and everything that impacts the flow of money from around the corner to around the world. I want to welcome you. Thank you for joining me and joining Money Never Sleeps Radio, taking time out of your lives to listen to what is going to be said on the show. I've been speaking a lot about technology because, you know, I'm a tech nerd and I just love it. It's the future of everything, AI, AR, VR, fintech, blockchain. I don't mean, the blockchain that people they kind of confuse with cryptocurrency. I'm talking about true blockchain that, you have AR and blockchain enabled systems that help them to be better. Okay, so what I want to start to talk about today is what's going on in AR. I was speaking about it earlier this morning in Europe, and it's just interesting how artificial intelligence is basically the foundation of everything. Augmented reality, virtual reality, without AI, they don't work. So you have the likes of big tech companies like Amazon, Apple, and Google. They're creating a foundation with their software development kits, their SDKs, and they're doing this to allow developers, or pretty much any business or anyone, actually they can build on top of what they have. Now, Microsoft is doing this as well. Let me not exclude them. It's good because you're going to have crazy innovation happening. There's going to be a lot of growth in the space. Something that someone brought up, which I agree with in totality, is the point that when you have companies, startups that are popping up, and they are AR or VR focused. They say, well, we're a VR company, we're an AR company, we're a blockchain company. Okay, what does that mean? What does that mean? You're a blockchain company doing what? You're an AR company doing what? Okay, if you look at it as an individual space, it's not that grand, meaning that the growth prospects aren't there if you just focus on that. Now, when you are focused on integration and you're focused on taking blockchain like what we've done with DocuMega. DocuMega is a blockchain-enabled document management system, e-signature system, document sharing, and everything is blockchain-enabled, which provides a heavy level of security. Also, you're talking about traceability and what we do, and we look at advanced blockchain, and this is the stuff that we incorporate in our platforms. And I think that companies, entrepreneurs that are looking at this space, they need to look at how their idea can be added on to an industry, that can be added on to something more than itself. Because where's the growth prospects? You may get people excited and they hear AR, VR, blockchain. Oh my God! I remember when blockchain was the latest thing, the hot thing when it came out. Not when it came out, because it's been around for a long time. But when it became mainstream, and people started hearing that because of Bitcoin, and they mistakenly thought that blockchain was cryptocurrency, but it is not. Blockchain is a foundation. Cryptocurrency just happens to lay on top of it on a platform like that, or actually on a foundation like that, on a system like that. So when that happened, you had everybody and their uncle all of a sudden at the tag of their name, of their company name. They're a blockchain. You had an iced tea company I believe out of New York that changed their name to whatever blockchain just so that they can capitalize it, and the stock went through the roof. So don't fall into that trap. Don't be stupid, okay, by thinking that you're smarter than the average bear. Because honestly, when you do that, you're going to wind up hitting a brick wall. And I'm being completely honest with you. If you think that you're gonna be so groundbreaking off the bat in an area, this is when you're gonna hit a brick wall because in those areas especially. Now, I'm not saying that something like that can't happen. It sure can happen. However, if a company, if an entrepreneur focuses on the integration of what they're doing into, let's say, manufacturing. Let's say you're involved in augmented reality, and you go and you take your platform and you reposition it, or you have a version of it that's geared towards manufacturing. I mean, that's a home run. Okay, because at that point you have augmented reality in manufacturing. You're involved in manufacturing technology. Okay, same way you can be involved in fintech by incorporating blockchain into a platform, into a system, into a banking institution, or another financial institution. So there's a lot of use cases, okay, where the incorporation or the integration of these technologies into other things become stronger, become something more than just blockchain. I'm a blockchain company. Okay, whoop-de-doo. What do you do? We make blockchain. Okay, what do you do? Tell me that, hey, we're involved in the blockchain industry, but we're geared towards manufacturing. We're geared towards real estate. We're geared towards something else. Okay, because right now, any industry, all of a sudden it's tech. Real estate tech, construction tech, everything's tech, everything's tech. So if you can get involved in that, you'll open up your range, and you'll be able to, increase your customer base, and more. And I'm telling you, you will increase your viability to an investor, because they'll look at you and say, hey, this could be interesting because it's scalable and there's growth opportunity, and then they'll see how you can pivot to add other industries to your tool belt. Okay, and you can do it. Just gotta look at things a little clearer than just being one dimensional. You don't want to be a one trick pony. No one, you may be cute for a minute, but no one wants to feed you and then clean up your feces for many years to come. Okay, be sustaining, be self-sustaining, and be growth-oriented, but be smart along the way. And again, I'm just being as blunt as possible because I've seen too much of it, and I can't use kid gloves when I'm talking about this because it doesn't help anyone. I'm not looking to spare your feelings. I'm looking to give you reality. Maybe that dose of reality will help you. And if I'm helping you, then I did something good. All right. Now I wanna pivot a little bit. I know actually before I pivot, in the AR arena, okay, you're gonna see AR powered and blockchain powered solutions. Okay, AR powered solutions. You're going to see it in retail and shopping. You're going to see it in navigation. Google has something going on there. Okay, one thing that, and I mentioned earlier in the show, that Google and Apple and Amazon, they're getting involved in with their the SDKs, and they're allowing developers to build on top of it. Google's doing stepping up their game. Okay, because they actually are incorporating AR and Chrome for websites. Now, how all that's going to look, I don't know. Very interesting. And again, this is the future. And AR has been around for a while. We've seen it from Pokemon Go to Damned If I Know. And the bottom line is, it's just going from the elementary stage to more advanced stages, which we're going to see it in medical. We're going to see it in other industries. So it's going to be very interesting. And blockchain integration into systems, that is going to be key. Not a standalone. I mean, standalone, what do you do? Blockchain is an accounting system, so it's immutable, it's irrefutable. It's something that's there. Whether you're decentralized, centralized. People have that crazy debate constantly. I just look at the efficiency. I look at the truth that comes out of it, and that's what matters. I don't get involved in the other thing because we're focused on what we're doing, and I try to give advice as I can uh, when I'm able to, and I utilize Money Never Sleeps to go and send these messages out to the world, and hopefully it does some good. Anyway, I want to stay on the topic of fintech for a little bit. Interesting, interesting. I have to look at big picture. Okay, I was talking about this earlier as well. Big picture. All right, fintech, the growth prospects are there. You have a lot of things happening. Okay, the ETFs, the public ETFs, publicly traded ETFs, the exchange traded funds, they're on fire. They have been on fire for the past 2 years, especially this year, 2020. They've been on fire. They've increased. In 2019, they went up about 30 something percent. This year, they're up another what, 60, 70%. Okay, and it's a crazy time. But the reality is that mainstream, the traders, the institutions, they know that fintech is important. It's an important part of their business because you're either going to advance your technology or you're going to be a dinosaur and wind up being found in 1,000 years. Okay, we've seen this in technology time and time again, time and time again. Going back to you know when Rockefeller had the oil based lamps and how he was very opposed to embracing electricity because it would hurt his business, but he had no choice. It happened. It happened, and what happened? This is the future. That was the future of everything, and then it just continued to progress. Those that resisted growth and change, um, like uh, like Jumbo Company. Yeah, you never heard of them because they're that's the whole point. But Blockbuster. A lot of you probably haven't heard that name ever. If you're younger, definitely not. Blockbuster was the end all of videos, tapes, DVDs, stuff like that. They had the opportunity to embrace technology before Netflix became anything. When Netflix was just shipping out CDs or actually DVDs to homes, they had the opportunity. Do you know what they did? They laughed at it. Do you know where they are now? They're out of business. They are the dinosaur. Done. They're prehistoric. They're gone. Okay? And this is what happens when you don't embrace technology. And this is why Citigroup just recently they backed the UK based fintech company, okay, called Genesis Global Tech, and that's going to add to the value of Citibank. Investors are looking at this. They should look at everything that these companies are doing. J.P. Morgan, Wells Fargo, what they're doing on the back end. Wells Fargo, they're embracing blockchain and they're incorporating things. With Citibank making outside investments into fintech companies is interesting. Okay, and it opens up the doors for a lot of things. And you have fintech not only in the United States but global. Okay, in Indonesia, you have a company over there. They considered it a unicorn status. They went and they said, okay, you know what? We're going to have our own fintech subsidiary, and they did this, and that's going to grow by leaps and bounds. Okay, and again, that's going to be interesting. In Italy, they had a big merger between two rival companies, big rivals over there. I don't know too much about it. Did not did not use them at all. But you had Nexi and Sia. They had a big merger. That merger, believe it or not, was worth close to $18 billion. It's 17 between 17 and 18 billion dollars. How do you like that? Let's call it 17.5 billion just to make it easy. All right, we'll go in the middle. Huge deal. You don't think about that as being something wow because in this environment right now, the mergers of these fintech companies is very interesting. You got to watch out for that. Because that innovation, that growth is going to trickle down to your brick and mortar banks, your traditional banks. They are competition for your traditional banks. This is why Jamie Dimon, J.P. Morgan, he mentioned time and time again that he embraces blockchain and has an issue with cryptocurrency. At the end of the day, a cryptocurrency, if it's viable, there's a use. Okay, if it's not viable, there's no use. I mean, look, let's just speak frankly about this. You have a lot of cryptocurrencies that are just issued and projects that are put out there, and they don't have any true value. You need to have value. Okay, and I don't want to get too much into cryptocurrencies, but I do want to talk about fintech just a little bit more. Okay, look, Square, Stripe, Venmo, which is owned by PayPal, Zelle, which a lot of the banks use. A lot of people are utilizing this for peer-to-peer transactions. There are no charges. It makes it easier for them to move money. So, you're going into a digital age. Now, how far is that going to go? Yeah, I think it's going to go all the way. It's going to take some time for the adoption. One of the main issues is security. This is why the banks they're highly involved in that, because they have to be. They're protecting they're protecting their interests. They're protecting your interests. That's what it comes down to. On the micro investing front, the one thing that I'll tell you is that there's been a big boom with that. Robinhood, Acorns, I've spoken about this before. Even Coinbase and Revolut, they are providing platforms for people to micro invest, perform small transactions on a peer-to-peer basis with low fees to no fees. Okay, and that's a positive. That's a positive for people, for the individual. So, and I think it's going to continue to bring a lot of younger people to the equation when it comes to investing, and I think they need to learn. They need to learn. This is why I tell everyone, if you want to really learn and get a quick summary of Wall Street, open the Investors Business Daily. If you open the Wall Street Journal, you'll be there for hours. Investors Business Daily, everything you need to know is on the first page. You tune into CNBC and Bloomberg and Fox Business, but more so CNBC and Bloomberg, you're going to learn a lot about the technicals. You're going to learn a lot about trading. You're going to learn a lot from people that have been doing it a long time. So, that's a good thing to do. And you listen to shows like this, and you hear guys like me rant about this stuff. And again, it's important things. In the fintech space, Square. Everyone knows Square, and I didn't mention Square in the fintech because I wanted to leave it to the end. Square, interesting. In 2017, Square was about $14. $14, okay, a share. Jack Dorsey, CEO of Twitter, he founded it. He had an idea. No one thought he can pull it off. Honestly, I thought maybe not. But he got some backing, some serious backing. And what happened? He dominated the space with Square and is still growing. Still growing, and it's a dominant player in that arena. A lot of businesses are utilizing it as opposed to going with traditional ways with credit card processing services, merchant accounts, things of that nature. They're going through Square. Now, I feel that the rates are a little high across the board, and this is why there has to be change. There has to be change. When your credit cards, they charge a merchant. I'm going on the business level. They charge a lot. Anywhere from a point and a half to 3 points, 3% on a transaction. That's pretty high. Okay, and Square is not is right in there. Maybe a half a point difference. Maybe they get you your money quicker. You don't have to wait the 30 days or whatever you need to wait. But at the end of the day, they're making money. And the reason you know this, just look at the stock. Stock trades of this symbols SQ. Okay, stock right now today from 2017, 3 years later, $180 a share, more or less, and still growing. And as the digital economy continues to grow, is as companies like that are going to continue to grow. Okay, it's really it's a dynamic time that we're in, and I think players in this space, they're going to keep upping the ante, and they're going to keep doubling down on the right companies, on the right deals. and you have to provide solutions in the space. That's why you have SPACs. SPACs are blowing up. I've been speaking about this. Money Never Sleeps. I've been speaking about this on Twitter. I've been speaking about this in general to everyone. SPACs, they're not new. People, it's new to them, the Special Purpose Acquisition Company, right? It's new to them because they have not been acquainted with it. Okay? This has been around for a lot of years. In the 80s and 90s, it was all about the reverse mergers, right? We've done, a lot of those. Okay, the only difference is, and this is a big difference, okay, a reverse merger, if you're reverse merging into an existing company that was a going concern at some point, you run the risk of having legal issues because you reverse into the company, you're taking over their liabilities, they're taking over their assets, you're taking over everything. So, you wind up backing into a dirty situation potentially. Not in all cases, but in a lot, especially on the OTCQB, on the pink sheets and things like that. You're going to have these problems. You even have these problems on the NASDAQ sometimes, or even on the New York. It all depends on the situation you're backing into. Is it good for investors? Yeah, if it's the right situation. However, if it's not the right situation, then you're backing into a problem, a headache, and, you have market makers in the middle, everything else, and it turns into a big fiasco, and you can lose your shirt. Okay, as far as a company backing in, a reverse merging into a dirty shell, a dirty blank check company, they can have you can wind up, losing your business essentially. All right, and that's a reality. People think that you go and you reverse merge into a dirty shell, and I keep saying dirty shell because they have problems. So you reverse merge into this. You think that you're going to have access to the public markets. Yeah, you do, kind of, but not really, because people are looking at it like, okay, you just did this. Your valuation is XYZ. What are your numbers? What's going on? And you think it's easier to get money. No, you have these players on the sideline that are sitting there waiting to give you their money. However, their money comes at a hefty price. Their money comes with warrant deals, with additional shares and all these type of backroom deals that can essentially put a company out of business. So you have to look at that. SPACs. On the other hand, when you have a fund manager that goes out, raises money for a blank check company, and they have a goal, a couple of good things come out of it. Okay, first, they raise the money. And it's not a little bit of money, substantial money. You anywhere 100 million, 500 million, $1 billion. You see Social Capital Chamath, he's done this. Okay, you have every player on the board that has done this. And they're involved in it more so now than ever because the traditional IPO is very costly. So it's and when you do go with a traditional IPO, chances are, as a founder of a company, as a CEO, you more than likely you're leaving a lot of money on the table. Okay, the investment bankers, these guys, they're making money, right? They're making bank. You, on the other hand, you may be leaving money on the table. So dealing with a SPAC is not a bad deal. It could be a fantastic deal if done the right way. Okay, because when that happens, whoever you have to make sure that whoever's running it is really as good at what they do. Okay, and the bottom line is you're going to get a capital injection very quickly. For the fund manager that's doing the deal, it gives them an opportunity to actually, look into the companies and see what they want to do and really take some time. Where, with an IPO, with other situations, it's a little difficult. When you're going to make a deal with a company, time is of the essence too, because one fund manager is not the only player. You have a lot of them. You have a lot of competition out there, and they're looking for viable companies to do deals with. So it could be a good deal if you're looking to go public. Okay, direct listings another way. You can direct list if you are in that position to do so, and you have the backing. But SPACs, all in all, when that happens, it is a reverse merger. Okay, you're reverse merging into the company, but the company is crystal clear, is pristine, is no issues, nothing. It just has a bunch of money that investors put into it because they're looking, they're banking on the fund manager to hit the holy grail and knock it out of the park. Period. The end. And they've been doing well so far. They've been doing well and taking some really good companies public, and these companies have been stable. And I don't. This is just beginning. This is just beginning. Okay, and as far as what we're doing with Megahoot, for those that know, we're not opposed to going down that road at some point. Okay, but just going back to this conversation, you have a lot of companies that are doing this because it's the easiest path for them to, get capital injection, get the right board members involved, and have sustainable growth. And that's what it's all about. Okay, you have the fintech space. These ETFs, they've been beating the S&P year on year. It's crazy. But keep in mind with fintech, as you're looking at fintech, as you're looking at AR, as you're looking at VR, as you're looking at all these areas, remember that artificial intelligence is the foundation of everything. Okay, so if you see companies that are building the foundation, and they're allowing other people to build on their foundation, that could be the money shot. That's the growth, sustainable growth, because they'll be around for a while. They're providing the infrastructure for companies to grow and exist in the first place. Some companies. All right. Anyway, that's about it for this episode of Money Never Sleeps. I want to thank you for tuning in and listening. I'm going to let you guys know that in the very near future, probably in the next couple of weeks, 2-3 weeks, I'm not sure on the timing, but we are going to be having we're going to be having the video version of Money Never Sleeps Radio, where I'll be bringing on guests. We'll be bringing on guests. We'll be having one-on-one, conversations about technology, finance, construction, real estate, and all types of things. We'll bring some interesting people on to speak about this, and we'll even bring on some companies that are looking to talk about what they're doing. So we're going to do this, and it's going to be on Vero Hive, and we're going to be doing it exclusively on there. And you'll be able to see it on there and see it on Money Never Sleeps Radio's website, and probably get distribution to YouTube, all that other fun stuff. Just the same way we do with the show itself. We're all over. We're from iHeartRadio to iTunes to Google to this to that, and Player FM, Stitcher. We're all over the place, so check us out and be a part of what we're doing. And if you have any questions, anything, just feel free to ask. If we can answer it, we'll try. We'll try our best, right? Anyway, on that note, you guys have a fantastic day. And again, I appreciate you, and I appreciate you tuning in to Money Never Sleeps.
Initiating shutdown sequence.
You're listening to UCW Radio. In your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.
All opinions expressed by Luis Velazquez on the Money Never Sleeps radio show and its website are solely his opinions and do not reflect the opinions of the UCW radio show or their parent company or affiliates, and may have been previously disseminated by him on television, radio, internet, or another medium. You should not treat any opinion expressed by him as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. His opinions are based upon information he considers to be reliable, but neither the UCW radio show nor its affiliates, parent companies, and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. The UCW radio show, Luis Velazquez, its affiliates, parent companies, and or subsidiaries are not under any obligation to update or correct any information provided on the radio show or on the website. His statements and opinions are subject to change without notice. No part of his compensation from the UCW radio show is related to the specific opinions he expresses. Please read the full disclaimer on MoneyNeverSleepsRadio.com.